Nice big strong movements up in stocks on the day on Thursday. And of course, the Qs, that is the NASDAQ 100, that trade we jumped in continues to rocket up. It is another wonderfully successful trade that we are having with the NASDAQ 100. Also, some interesting developments for you in the S&P 500. We have a great training attached to everyone who actually subscribes to chartingwealth.com's daily reviews and our once a week weekly review and forecast. If you're a subscriber, you will see in your show notes today a special training that we put out for you on market crash, the market crash that is coming. There's always one coming. And are you going to be prepared for it? How do you prepare for it? We help you prepare for it. We want you to be plugged into us 10 minutes a day. Learn the information we have on the channel. Great trainings. Take one or two a week. They're all available at the website. Follow us on a daily basis. If you have the time, fill out the daily market worksheet. If not, at least the weekly market worksheet, and do practice trading every chance you get. That is, jump into those trades that we talk about. Do the practice trade. Keep your worksheet, which is the number one thing you've got to do. That's where you're going to really have all the knowledge and the notes and the wisdom that you're going to garner from doing the practice trades is going to be on that trade worksheet. So study with us every day. You will find it will be worth its weight in gold to you. Now, let's jump into the S&P 500. Oh, if you're not a subscriber, go to chartingwealth.com, sign up for free, and you'll have that special training in your show notes. So we see that the S&P is up for the day 1.08%. That is quite nice. And we're going to come back to this 4-hour chart in just a minute. Something really wild happened on that chart. But let's start with the weekly chart. And of course, we had the two prior weeks a sideways slide going on. This week, nice green solid up candle forming one more day of that. Price percent oscillator moving up quite nicely. Derivative oscillator still losing momentum. We're not going to worry so much about that. We really use the derivative oscillator to help us see really good changes in trend when it flips at the same time that the price percent oscillator moves over in a direction. We like to see them both turn at the same time. Typically portends a better move. So we look at the 2-day chart, just the first day of the latest 2-day chart. Got a little wick on the bottom. We don't like to see those. We like to see good, strong up movement. But things are moving up okay, well above the weekly trend line. Not, we can look to sort of, well, we can pretty well redraw. In fact, I like to start drawing trend lines from the trend crossover. So we're okay in that territory as we draw that trend line. Price percent oscillators pulling away from the red signal line, derivative oscillator moving up. Now here's the curious thing that happened during the day. We said we were waiting for a pullback, and look what happened. We saw that as the market opened, and again, we had things pulling back, and all of a sudden in the morning on Thursday, we had things after a I'm talking a 1-candle 4-hour pullback, things pulled over, and then of course your jumping in point was around noon today. Hopefully you pulled the trigger on that and jumped into the S&P 500 to do a practice trade. Were you paying attention? Did you catch that? If you did, great. If you didn't, don't worry about it. Things are getting long in the tooth. And of course, as we go from here, but just again to pay attention, derivative oscillator's not gone over. So if you had a pause for concern and saw the derivative oscillator still negative, that's okay. If you were worried about things bouncing around too much for you, hey, first rule of trading, don't lose money. Second rule of trading, make money. And when things are long in the tooth and the weekly vertical crossover is back many weeks, I can understand people, again, being a little bit hesitant with the way things popped around. But we do have the 2-day and the weekly moving in the same direction. We did have a little brief pullback, and we did have a jumping in point in the afternoon. Now, what were we in though? Solid as a rock so far. The NASDAQ 100 is represented by QQQ. It also had a weekly vertical crossover back quite a while. after the beginning of the year on the week ending the 25th of January. And of course, it's only had one pullback that entire time. And one of the strongest green up candles that we've seen is this week's. And even the derivative oscillator has started gaining upward momentum. Price percent oscillator spiking up quite nicely. We go from the weekly to the 2-day. And we see on that 2-day a nice, look at that, 4 candles virtually connected, moving up quite nice. And we see the derivative oscillator gaining upward momentum, price percent oscillator spiking up first day of this latest 2-day candle. And look at the beauty on the 4-hour chart, my friends. Our jumping in point, somewhere around the 175 mark or so, and things bumping up as high as 180 to 83. Is that not incredible in just that short a period of time? It is absolutely gorgeous. Hopefully you jumped into that practice trade and you have been riding this gravy train with lots of virtual dollars accumulating in your account. That is absolutely beautiful. If you're in it, you sure don't have to worry about missing that S&P trade. It might not be very long in the tooth, but this is just gorgeous. Just gorgeous, just keeps moving up so beautifully. So again, that's the magic of the methods that we teach, the weekly vertical crossover method and the method of the 2-day and the weekly moving in the same direction, a pullback on the 4-hour chart and a cross back over going in the same direction as the two larger charts, that is the intermediate, the 2-day, and the long chart, the weekly, and jumping into that and riding that trend. That is how you successfully jump into successful trades. Okay. Now, let's keep moving through these charts. Very, very happy with that. What's going on 20-year bonds? Well, going into the second week, it looks like an up movement, trying to see, is it going to close higher? And it is. It is moving up higher than, of course, it did back on the weekly candle ending Friday the 22nd of February. Still, though, haven't hit the high that things did back on the week ending the 4th of January. Bonds have really been sliding sideways for quite a while. We'll see just what bonds are going to sort out for us. We see the weekly chart moving up, still negative as far as the derivative oscillator, but that price percent oscillator spiking up quite nicely. We go to the 2-day chart. What do we see there? Well, of course, we recently had that 2-day crossover, and then, of course, a nice strong up movement on this first day of the latest 2-day candle derivative oscillator crossing at the same time as the price percent oscillator. We talked about how that is typically a good sign. Things moving up nicely. Look at the 4-hour chart. And of course, things are continuing to hammer up. We do see things sort of flat at the end of the day, about where things were in the morning. Now, one thing for you, and these are on our Heikin Ashi candlesticks, so they show us average pace slowing. But the one thing to remember is don't have a jumping in point, because we need that pullback like we just had happen in the S&P 500 until we jump into this trade on bonds. But we are set up for it with the weekly and the 2-day both moving up now. Interesting how those things sorted themselves out rather quickly. Lastly, we go to gold. Gold down for the day, 0.40%. Keep hoping gold is going to cross over going down, because I want to short gold on a practice trade with you. But it just isn't quite there. Is it going to happen by the end of the week? We have a big down day on gold on Friday. It could. We will keep you posted. If you're not signed up for our texting service and you live in the States, you need to do so. You'll see that also in your show notes. How to do that. We have several hundred people that we send out notices to whenever there's a weekly vertical crossover. If you're signed up and hadn't gotten one lately, there's a reason. There hasn't been a weekly vertical crossover lately. So again, things have just continued to either move sideways or in the same direction as those old weekly vertical crossovers. If you live overseas, you cannot get the text service, but guess what? We talk about weekly vertical crossovers in our weekly review and forecast that we do at the close of the market every Friday. But again, if you're in the States, sign up for that. You'll see a link in the show notes. Now, what do we see going on gold? Well, we're forming a green up candle. Really, a spinning top means indecision, tending up, but just not not enough energy to cross over going down as far as down energy goes. Derivative oscillator still oscillating downward. We go to the, I put in the daily. We go to the 2-day. What do we see going on there on gold? Again, gold has been going up now 9 days. So that's a lot of up movement. Price percent oscillator, however, after 3 huge downstrokes, which 6 days of strong down movements, just flat. Derivative oscillator losing downward momentum. So again, we have the weekly in a confirmed up move, 2-day in a confirmed down move, waiting for gold to sort itself out one way or the other. And it eventually will. We see that the 4-hour chart is still continuing to move up. Up in the morning, a little bit of a pullback in the afternoon, again down for the day, 0.40%. Folks, that's where we are as we end the day. And again, encourage you to sign up for our daily market review, and you do get that once a week comprehensive review and forecast. Special training there for you in the show notes. You will not find them at the YouTube channel or anywhere else, but you will find them if you are a subscriber. Also, you will find in the YouTube show notes, and you'll find in the show notes for the Charting Wealth daily review that we send out. You can also find it at the website. You'll find links to purchase our book. You want to know what we really do here and have it concisely listed out for you in an easy-to-read format. Buy our book. We will ship it to you. The price includes shipping. We will be happy to have you purchase our book. Thank you so much to everyone who's listening who has supported us in that way. If you live overseas, you can email me, cw@chartingwealth.com. That's our email address. C as in charting, W as in wealth, at chartingwealth.com, cw@chartingwealth.com. Send us just an email that says, I want to buy your book wherever you live. We will then send you a PayPal invoice. You can pay that, and we'll get your book off to you wherever you get your mail in the world. Happy to have your support. Now, if you want the really, really cool stuff, of course, we reserve that for our Patreon supporters, and you can find out more about that by following our Patreon link. We have once a month Q&As that take place along with reviewing charts that you're interested in, whatever stocks or ETFs you'd like us to review. And depending on your level, you actually get a call from me every month, and you also get a free book. Okay, my friends, we so appreciate you being with us. You have questions, problems, concerns, feel free to write us, cw@chartingwealth.com. God bless. All the best from the whole team here at Charting Wealth World Headquarters.